retain with a $400,000 pension for life. And so we're going to put burdens on our companies to be able to send money over there so that they can fund that extravagance. And I would also note that a lot of that money goes to funding union dues that end up helping fund political campaigns. So why would we want to do that? So the bottom line is that the bill is bad for consumers. It represents taxation without representation. It will stymie small business growth, and it will create perverse economic incentives. Our political system right now is suffering from an accountability crisis. The last thing we need to do is expand government and add to this problem. And I yield back to the gentleman from Kentucky.
Thank you to the gentleman from Florida. He makes an excellent point on the sales tax audit burden on small businesses. I'd like to give you two examples of companies in my district. These are literally mom and pop shops. One of them, the wife is the CFO and the husband runs the company. And in the other one, the father owns the company and the son works there every day. They were both subjected to sales tax audits in one state. Let me tell you how the sales tax audit begins and how it ends. So the way it began was with a phone call. And that, for many small businesses, is the worst phone call of their life, of their business lives, because they know what they're going to have to endure. So let me give you the example of this farm store who underwent a sales tax audit. He was required to prove that every sales tax exempt sale that he made in the previous years was in fact exempt from sales tax under Kentucky state law. The sales tax auditors will pursue you to the end of the earth if they think there's another dime to be found. So they pursued him with much vigor. He spent weeks looking for records, trying to prove that these were in fact sales tax exempt, because if they were not, he owed the sales tax on all of those sales. How does this kind of audit end? It ends with a white flag. There's no way to prove, there's no way to find every shred of paper for every transaction that you've ever had in the past years. So you finally settle with the sales tax auditors. Can you imagine that? You'd be open to sales tax audit, which I've just described, in 45 different states. Now, maybe it only happens once every 10 years in your state. Maybe that's the average. But on average, you'll get 4.5 sales tax audits a year, which brings me to the next small business in my district, where the wife is the CFO. This business was subjected to a sales tax audit and an IRS audit in the same year. In fact, this year, this business owner came to me and said, "Can you pass a bill that would keep me from having to go through 2 audits in the same year? I mean, it's just not fair. I've got a state tax audit and a federal audit in the same year. This is killing my business. My wife can't work on anything but these audits." Can you imagine if that business is now subjected to 45 audits in 45 different states? I just can't let this individual down. And while we're talking about sales tax audits, it's up to the states to decide what's sales tax exempt and what's not. And every state has a different rule. And the only way to enforce these rules and to know if you've complied with, is it for a farm, is it for education, is it for resale, is for the retailer to submit all of those sales records, information, if you will, on the individual that purchased them to the state where the individual lives. This is ripe for corruption, just as we saw with the IRS recently. Now they know what music you've downloaded, what movies you've downloaded. Maybe you bought some gun magazines. They're going to know about all of this, and it's just ripe for corruption and for exploitation. With this, I'd like to yield to my good friend and colleague from the state of Montana.
Thanks much to my good friend from Kentucky, Mr. Thomas Massie, for coordinating the special order here tonight. I appreciate it greatly. We're here tonight to share our strong opposition to the so-called Marketplace Fairness Act. This is a bill that mandates small businesses to collect sales tax on behalf of other cities and states when selling products over the internet. The problem is this bill would fundamentally change how online purchases are taxed and would impose yet another burden on small businesses across the country, but especially in places like my home state of Montana. You see, in Montana, we don't have a statewide sales tax. In fact, we often say you know you're a native Montanan if you voted against a sales tax twice. But I will have to say that in my home state, we have a balanced budget requirement. And not only did our state balance its budget this year, we're running a surplus. And we've done that without a sales tax. And Washington should do the same. They should learn how to balance their budget, and they don't have to impose a sales tax that's imposed on businesses across this country. But even though we don't have a sales tax, under this legislation, Montana small business would be forced to collect sales taxes for up to 9,600 cities and states, none of which would go back to the people of Montana. Let me be clear, this isn't just a bill that hurts no sales tax states like Montana. It hurts small businesses in every state, burdening businesses that depend on internet sales with added costs and more paperwork and more regulations. Proponents of this bill say, well, it's about fairness. They say that this bill will help prevent the supposedly widespread practice of showrooming, where customers visit a physical store but then buy the goods online, where customers can get a better price or avoid paying sales tax. According to proponents of this bill, this showrooming is destroying our brick-and-mortar businesses. Well, ladies and gentlemen, this is not only misleading, it's wrong. As the National Journal reported, a recent PricewaterhouseCoopers survey of 10,000 shoppers found this so-called widespread problem occurred less than 2% of the time. In fact, the survey found that 10 times as many consumers research products online so they could go buy them at the local brick-and-mortar shop. Think about that. And we've all had that happen to us. You may go online and shop, but you may not want to pay the shipping cost. You may not want to have the time it takes to receive the goods. You may want to be buying that bike for your child. So you go downtown and buy at the brick-and-mortar store. Furthermore, the study states, and I quote, "We also can't emphasize enough that the physical store remains the centerpiece of the purchase journey for many categories. In 9 out of 11 categories, in fact, the majority of consumers use physical stores for both researching and purchasing the products they want to buy," end quote. I know that many times I'd rather head downtown to my home of Bozeman, Montana, to talk with folks face-to-face and purchase a product I've researched online so I can avoid shipping fees and avoiding the wait time. I know a lot of Montanans feel the same way. But then I also have to ask, what is fair about forcing a small business that relies on internet sales to learn the ins and outs of 9,600 different tax jurisdictions, or be subjected to tax audits, as the gentleman from Kentucky just mentioned, not just from one state, but from all 46 states that collect sales tax? Imposing these unreasonable standards on online retail sales, but not also on brick-and-mortar retail sales, is not only unfair, it's unworkable. I've heard from Montana small business owners who are deeply concerned about what this bill means for them and how it will affect their ability to remain profitable. I'm concerned too. I've spent nearly 3 decades in the private sector. In fact, prior to having served in Congress, the last elective office I held was student body president of my high school. So I've come from the business world. I've been a job creator and somebody who's had to fight through regulations and pay taxes. I know that if you're a small business owner and you're forced to comply with more than 9,000 different tax codes, which, by the way, most small business owners readily admit it's next to impossible for any small business to do that, you are not going to be investing in your own business. You're not going to be hiring new employees. You're not going to be growing your product base or promoting innovation. You're now going to be spending more time and more capital dealing with regulations and mandates, more time with lawyers and accountants. We also can't forget the threat that this holds for principles that are foundation of our nation's tax policy, and that is states must not be allowed to extend their taxation and regulatory authorities beyond their borders. The internet tax would do away with the physical presence standard, which dictates that a state can only require a business to collect a sales tax if it's physically present within its boundaries. Furthermore, the people don't want an online sales tax. A recent survey found that 84% of consumers were opposed to this bill. 75% of small online retailers are opposed. Those numbers send a clear message that the American people are strongly opposed to this proposal. So I would ask my colleagues this. Remember, this is the people's house. We are here to represent our districts and our states and do what is best for them. The problem back in this town in Washington, D.C. is that the big businesses, the big corporations have lobbyists here to be the voice here on the Hill. We need to be the voice tonight for the small business people who don't have lobbyists here in Washington, D.C. because they can't afford them. Imposing a new tax burden in these precarious economic times is clearly not what our small businesses and consumers need. I know one of the fastest ways to slow down growth and innovation is to tax it and to regulate it. This bill is a $23 billion tax increase coming right out of the pockets of hardworking American families. So let me be clear. The so-called Marketplace Fairness Act is a job-killing tax hike that hurts American small businesses and it hurts American consumers. And I promise I will continue to fight this bad piece of legislation.
Thank you. Mr. Speaker, I'd like to remind my colleagues that Mr. Daines represents the great state of Montana, which operates with a lean government and has so far got by without a sales tax. That's the great thing about these United States of America. We have 50 states competing with different models for how to run their governments. This tax, as I call it, the interstate commerce tax, is more about harmonizing tax laws across the United States and taking away the competition between states. Now, my fair state of Kentucky has a sales tax of 6%, but I don't think it's fair that we impose a sales tax on the state of Montana when they've worked very hard not to have one. Their businesses aren't subjected ever to a sales tax audit if they don't have to collect the sales tax. So I think he's too modest in not reminding us that he's coming from the state of Montana that has no sales tax. This Marketplace Fairness Act could be called the Offshore or Online Retailers Act, because while as congressmen and senators we can force the states to collect these taxes, we can't go into other countries and force them to collect taxes. So what will happen is a lot of our online retailers will move across the border where they enjoy the advantage of collecting no sales tax, and there's no way to reach them and impose that tax upon them. Now, some say this is not a new tax. Don't call it a new tax. While others say it's not a tax increase. Don't call this a tax increase. Well, I say if it quacks like a duck and it walks like a duck, it's a duck. I'm new to Congress, but if at the end of a transaction I have less money in my wallet and the government has the money in their coffers, I call it a tax. Now, some will say, look, consumers already owe this tax. At the end of the year, on April 15th, they are supposed to pay the sales tax that wasn't collected in other states. But you know what? That's just not true. They don't owe a sales tax because states long ago conceded that they don't have any authority to tax an event which occurs outside of their physical borders. They just can't do it without a physical presence. But states resented that they couldn't tax in other states, so they created something called a use tax. And I say the use tax is actually a contrived tax. They know they can't tax an event outside of their borders, so they try to tax an event inside of their borders, which is the use of a product. But it's contrived in the sense that it's only owed if you didn't pay a tax on it somewhere else already. So what kind of a tax is that? I'll tell you what it is. It's an uncollectible tax, and the states haven't exerted much effort in collecting that tax. We are not here to become tax collectors for the states. I just want to remind the states that. And then also I want to talk a little bit more about my district. A large portion of my district is rural. We don't have stores to buy everything that we'd like to be able to purchase. A lot of folks go online. A lot of folks who are disabled and can't get to the store go online. This is a regressive tax. This will punish those individuals who have the least mobility because they're online shopping. It also diminishes opportunities for businesses in rural areas by taxing those businesses that weren't taxed before, that don't have a ready marketplace immediately in their vicinity. Look, we've heard from big business, we've heard from lobbyists, we've heard from state governments, but there's somebody absent from this debate so far, and it's our constituents. I think we need to hear from them. And with that, and to address that issue, I yield to the gentleman from Florida.
Well, I thank the gentleman from Kentucky, and I would just add to your comments, you started by talking about the federalism, the ability to kind of choose different tax laws, whatever laws, and this would actually facilitate higher taxes. It's a thumb on the scale in favor of higher taxes because it gives states the wherewithal to tax beyond their borders. And so we should at least be trying to go in the other direction. I mean, I want Florida to be more like Montana, not more like some of the other high-tax states. And so I think that bears repeating. So here are some of the folks who have written in via Twitter with their thoughts. Chris writes in, please tell the House that hashtag internet tax translates into higher costs for families and consumers. A weak economy cannot afford this. Andrew writes in, this will just be the 21st century version of Smoot-Hawley. Will the lunacy from D.C. never cease? Jay writes in and says the internet tax is an inappropriate extension of the state's powers. It does not make commerce more fair. Another fellow writes in, says it's a revenue grab, plain and simple, no taxation without representation. Is that vague? Tiffany Lyle says, if you tax the internet, it's like taxing air. We work hard enough to earn what little we have. And then Glenn writes in, remind them of how the Stamp Act went. And so I have some more, but I will yield back to the gentleman from Kentucky because I know you probably have some more comments as well.
Well, those comments bring up a very good point, and so do your comments. If this is a finger on the scale for higher taxes, states get to arbitrate and decide what gets taxed in their state. So right now we have exemptions for farm products and whatnot, but some states tax professional services in the transaction. And of course, this bill opens up financial service transactions in one state to consumers in another state. But where does this end? As Senator Baca stated on the other chamber, that not just the financial world would be open to taxes on their services, but also possibly attorneys, architects, engineers, and accountants. One can only imagine. By not asking the states to do anything to simplify their system in return for the benefit of having out-of-state business collect taxes for them, we're giving them carte blanche to the states to impose even more taxes on business. And again, I think I'd like to hear a few more comments from our constituents.
Yeah, we do have some more. Corey writes in, I feel it may hinder an online business I've just started. It's already making business pay. Mark says that hashtag internet tax won't help local stores, but will protect online incumbents from new competition. Taylor Newhouse writes in and says, I like the hashtag internet tax about as much as I like getting teeth pulled. We have another fellow writes in, says, it hurts small businesses and it's basically Walmart versus Amazon with consumers in the middle. And then finally, I think this is a great comment from Ian Stumpf. An internet tax will hurt one of the few remaining healthy sectors of the economy, hashtag disastrous. And I yield back to the gentleman from Kentucky.
Thank you to the gentleman from Florida for sharing that with us. I think all too often we don't hear or listen as much to our constituents as we should. And on this issue, it's very important because those are, in fact, the people who are going to bear the burden of this new tax. And I will call it a new tax. It's unprecedented in our Constitution and in the history of this country. I'm going to end this discussion tonight the way it began and the way I said it would end and the way it would end. No single individual who's a proponent of this tax has told me that it's going to help the economy. In fact, when I point out that it will increase taxes on consumers, when it will increase burden on small businesses, and when it will apply pressure to offshore our online retailers, they all ultimately concede those points. This is not good for our country. The resistance to this bill comes from our constituents, and it's also bipartisan as well. So hopefully, by bringing light to this today, we will begin the conversation